computer. All right, another Sunday, which means a bunch of fun. Welcome into the webinar. Well, kind of a webinar. Sunday prep, as usual. We have I think I have actually a few updates only. And mainly it's interest rate driven. I think the only thing that has changed in this past week is the US 10-year has been a bit stubborn, which now bond market participants are basically they're pricing in the unlikelihood of 2 rate cuts, and they're pricing in the likelihood of just 1 rate cut, which is exactly what we were talking about all along, right? The beginning of this year, if you remember, there were like a shit ton of rate cuts on the table. The year before that, even more, right? And so that's been the main message here. It's been the main focus. The market is likely to find some form of a pullback or a repricing rejection of the 23.6 if 10-year yields continue to go further higher, okay? Let's say up to 4.22%, okay? 4.35 would be the main first area at which the yield would start to create some issues. And then if at the same time, the dollar decides to rally on strength of the economic policies, okay? So that will be two things that might cause potential pullback in the market. But if you look at these two charts, very, very similar looking charts, but except for the NASDAQ is just sitting above the 23.6 extension, and the S&P 500 is firmly sitting at or showing signs of potentially reversing, which doesn't need to be the case, because if you go into a smaller time frame, remember that this is just a box, right? It's just a good old box here. So whichever way this box breaks is where you'd likely get your answer, right? So this little box here. Yeah. Now, cryptos. What a move on Ethereum, right? When I told you guys to purchase when it came down and was telling you guys about it for a while, right? Even during this whole big wave down, this was a nice time to purchase Ethereum. Bitcoin is still on its upward climb here, right? And likely to see extension in the near future. The way I look at it is crypto assets are I think the one of the asset classes right now that are still seeing high amount of momentum. Okay. US dashboard, nothing has changed. Not much has changed, at least. Velocity of M2 still the same, M2 still the same, Fed funds still the same. No changes here, literally. But then you're going to see that by the end of the year, this dashboard going to look completely different. Okay.
He loves the dashboard.
Yeah, this is going to look completely different. And actually, the one thing that I did see the past couple of sessions that was interesting was the RRP, the overnight reverse repurchase agreements. For those of you that don't know, this is like the Federal Reserve's plumbing system to get money through to the banks overnight if they need it in an emergency. And we had peaked out somewhere in June, okay, 27 June, or in fact, sorry, yeah, somewhere around there, okay, at around 400 billion overnight. Okay, something had happened, that's the reason why that happened. And now you can see the trend is just going down and down and down and down, right? So the Fed's not even putting that much money in the overnight repo, which means the banking system is probably flush, right? With M2 growing, M2 velocity of M2 growing, we've spoken about all this before, right? I think now is the time where we start getting some solid financial conditions for equity to pull back, rally, pull back, rally, pull back, rally, the same cycle over and over again. China, let me shift your attention to this market, which you might have forgotten existed, right? Remember when they introduced emergency stimulus of close to 10 trillion yuan, which I think it was a couple hundred billion or whatever, right? And then the market sold off very abruptly the next week, and then rallied even harder the week after, and then multiple weeks after, and then now many weeks down after the Liberation Day and all that, this Chinese market is now still inching higher. Okay, Remember that all-time highs is still quite far away. So as US monetary policy enters cheaper liquidity and lending rates, then what happens to Chinese equities that are all to some partial degree also benefiting from lower interest rates, right? Because then they would have an easier time doing business, right? So keep an eye on this. If a pullback happens, you have the opportunity. Okay, portfolio update. I took almost all my profits, not all, but basically only my principal amount of the profits are left in here. So you see how it says that there's $3,400 worth of Ethereum here now. That's because I've taken a bunch of profit and I've reallocated some money elsewhere as well. Bought some NVO, bought some CRM, as I was telling you guys about. Bull, right? Celsius, this is one of the best performing picks that we've had. I took half profits on it already, 108%, right? And ARC as well, very nice. Bitcoin still doing strong. SoFi, 89% for those of you that took that one. SOXL, 39% on that one. Beautiful. I will also be cutting this position in almost half in the next couple of weeks because I don't want so much of money allocated to what do you call a leverage ETF, right? Because of the diminishing returns. So I'll be cutting some of my taking some profits off the table for sure, and then letting some of this ride. Coinbase, also a very good one that continues to give opportunities, which if it can bounce, it's going to be great, right? Okay. Let's try that thing. Okay. Okay, now the VIX, this has been interesting, but very all over the place. And I think the only good thing that came above this was the rinse from the anti-VIX in the previous session. So the VIX is rebalanced for that short period of time. I'm trying to find, where is it? Internal. So first of all, tactical sentiment back to the middle. This is basically like your, fluctuation of momentum and price action, right? And also, thought I should mention this. There is a Tesla bull rolling out their August trade for October expiration. Not saying that, you should follow this activity, but usually when things like this happen, multiple, strikes across, it's a pretty good telltale sign that the stock's about to kind of do something. But so you can see that for this particular one, they bought 325 strikes. So that's actually in the money, right? And so they're likely playing like in the money squeeze positioning or something along those lines. My top setups for this week are Tesla, Apple for continuation if it can retrace back. In fact, this might be a decent retrace as well. Look at that bounce on CRM. Did anyone get any shares? Did anyone buy this? Because we just spoke about it literally last week, right? Very nice bounce. Beautiful. If you bought shares, you should be already up, right? And then the other opportunity is Baba. If it can bounce out of this area here, I would be happy to take a long position up into the 135. That's about it. Novo Nordisk also showing signs of a potential bounce here. We will see how it plays out, but that's all I have. Apart from that, a lot of these setups are just either at highs or they're looking to reject and kind of pull back a little bit. Like for example, more than likely here on SoFi, what I will be doing is I will either take some profits off the table, meaning my profits P&L wise, or so if I know it's $1,700 and I'll just go ahead and take $1,700 off this, that means my cost is no longer there. It's just free shares that I own, right? But the other thing you can do is you can sell covered calls above you. Okay. And that's another way to collect dividends in the short run. So you could sell some $24 or $25 calls above to someone else and they think that SoFi is going to go to 24.25. It doesn't. It retraces. You make money on the options trade. The option decays, and then you take profits. Okay, so that also is a possibility. And yeah, so apart from that, I don't have any moves to make this week. But those are the setups I'm looking at. That's the backdrop. And let's look at the data from Andrew.
All right. You know what? Let me make sure I'm logged in because this whole time I haven't been. 1 second. There we go. Okay. I think I'm logged in now. All right, cool. Let me share my screen with you guys. All right. Well, first off, it's nice having T back. I don't think we've had a Sunday session, the two of us, in what, 3 months?
Month and a half or two.
Yeah, man, it's been a while.
Yeah.
So it's nice. It's nice having the gang back together.
Yeah.
All right, let's dive into the nitty gritty. So, if you've been following along the last few weeks, we've been on a good streak. You've been paying attention to the key levels. They've been playing out really well. As you guys know, last week 640 was the key level. We broke above 640. The buying pressure kicked in. We pushed up into the weekly move, which was about 636-ish. It was like this area right here. And it played out pretty nicely. As T talked about, right? Really, what you're doing is you're just putting this in a box. I'm going to go into detail on some of those key levels, but we're in a really nice consolidation right now, right? And so it makes it really easy to evaluate this week. As you can see, you have buying pressure here at 647. Now, this buying pressure expires next week, right? So essentially 829, I think it is. So, maybe it happens this week, maybe it doesn't. But it's important to understand that if price gets over that 647 level, that buying pressure can kick in, right? So, you hear me say it all the time, right? If we go into price discovery, the market can continue to melt higher. What's interesting about this consolidation is this dark pool activity that we've seen over the last few days right around this area here. So this 3.1 right here is actually from Friday, I believe, if I remember correctly. Let me just double check that real quick. Yeah, so that 3.1 is actually from Friday. And then that other print, the 1 billion, that was from a few days ago. So you can see right here, clear as day, that somebody is holding the market up. Right? These are 4-hour candles, and you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 of them. So you essentially have 11 4-hour candles that have closed above this dark pool level, right? So that helps you better understand, should you be taking risk or not? If you somehow get a close below this dark pool, then I anticipate price is probably going to work its way down into 640 or into this golden pocket down here, right? You guys all know the strategy with the golden pocket. If it breaks the golden pocket, then we expect it to come down into the low, which would be down here, right? Which would be our bearish target move. If it bounces at the golden pocket, then we anticipate it to push back up to the GP or break and then go into the extensions, right? So what's nice about, what we're looking at this week is you have a really clear range here with 647 being a key level here with buying pressure and these dark pools here playing as support. So you have data on both sides, whether it's upside or downside, to help you understand what it is you want to do. Now, if we take a look at some of the gamma levels here, we can see for the week here, this is SPY for 822. We can see the biggest level is 638. which 638 would line up with that golden pocket right here, right? So 638 is right here in that golden pocket area. So what would that tell us? If price were to close below this area, then we would anticipate price to come down into 638, which would be the golden pocket. Now, does it break that and liquidity sweep the bearish target? Maybe. We don't know what's going to happen there, but we can see that looking at this week right now, we would potentially be looking for a move to 638. We can also see that that would put us into negative gamma, right? So a negative gamma environment, which we would flip at about, what is that, 643? Yeah, 643. So if we were to break below those dark pool levels, we would break into negative gamma. Therefore, we could see the market start to bleed a little bit down towards that 640, 638. Now, if we hold and we break above that 647 level, then you can see that the biggest level to the upside is 650. So if we extend this a little bit and go look at the upside scenarios, we can see that if price were to break above the 647 and the buying pressure kicks in, then there's a very good chance that this would melt the market up into the 650 level, which is our biggest gamma level for the week, right? Our gamma target. Now, if we somehow break 650, then we would add more buying pressure. So you'd have buying pressure from 647 all the way up through 650, which would then melt the market up into our weekly move of 652.52. So again, really important level, that 647 level. If we can get over that, then there's a good chance that we see the market melt up into that 650 level. If we can get through that 650 level, then we can see the market start to push up towards that weekly move. So again, it's going to come down to, do we close below these dark pool levels, which we have not been able to do, or do we break into all-time high territory, creating a squeeze on the shorts as we continue to melt up towards 650. Now, if we take a look at the next week, which we already know is slightly bullish, right? We can see that gamma builds up here. So you have 645, stop. So we have 645, 647, which I just told you, we already know where that gamma comes from. It comes from that buying pressure from the dealers, and then 650. So again, if price can get over 647, the buying pressure will kick in, therefore creating a magnet into that 650 level from the buying pressure that's coming from 647. Now, if you want to see it from a visual standpoint, you can see, don't pay attention to this because this is going to fall off. This is from last week. But you can see all of this buying pressure here. This is 640 here. This is 647. This is 650. This is 655. And this is 670. So what does that mean? That means the customers are long. They're playing the upside. The dealers have to take on that downside risk. Therefore, if it goes over those levels, the dealers have to buy shares in order to hedge that risk, which is what creates the buying pressure or the squeeze on the shorts, which are the dealers. So as we're taking a look at this, this is essentially, how it breaks down. If you just want the breakdown, there's a full readout right here, which I've already posted in T's group as well as my group. So there's a full breakdown here for you guys to go through and read through it. All the data I just walked you guys through, you can go through the data if you want, but it's just going to be all the same stuff that I just talked about. So we're not going to walk through it too much. The one thing I will point out, if you do look at seasonality, we're going into the back end of August. So if you think about it, like we're kind of like in this area right here. And so you'll notice that the back end of August usually does have a push, right? So you could still see some more upside. Plus, you also have a push in the early parts of September before you get into that downside on the quarterly expiration, right? So there is still potential for a move to the upside. If we get over 647, the market can still melt into 650 or potentially 652 and change, which is our bullish weekly target. So that is what we're looking for going into this week. I also posted the SPX chart just so you guys could see the correlation. It's a really nice consolidation when you look at it. Here's the SPX chart. So you can see kind of the key level here of this 6450 gamma level. If this breaks, you've got a pretty good move down into that 6400 area. So again, a really clean consolidation here. Maybe a liquidity sweep here, right? If we do get that pullback and you break below this area, below those dark pool levels on SPY, and head down towards this retrace here. This is your wave here. So it's a pretty clean setup if we do break below, but also if we do break over 647, there's a very good chance that this market can melt all the way up to 650 and possibly higher. Now, keep in mind for the people that have been here for a minute, we've talked about 650 for quite some time, right? If you go to the end of the year, 650 is the biggest level to the upside, right? And then you got this guy down here at 575, which we have no idea what the hell that is. But essentially, we've been melting towards this 650 for quite some time. So that is what I am looking at this week. And we'll see if we can hit another target here and keep it pushing. So that, I'll open up to you guys and your questions. Look like one for T already. Good to have you back. Nice breakdown on Tesla and Apple. Oh, no, I was just saying. Nice work. Good job, T. NVO's up 5% overnight. Nice.
Yeah, I think they had good
Okay. Number
earnings.
one sector.
I think they had good earnings. So,
Oh, did they?
hmm.
So XOM. Yeah, I like XOM.
Oh, I forgot to mention something to everybody. Um, United Healthcare. If you had not bought United Healthcare at 230 or 250 or 240, that range, and then the stock blasted 11%, and then you haven't bought any yet, and then you're like thinking that, oh, I should just maybe buy some or I shouldn't buy some, just wait. There's more time. Okay. Yes, it can go higher, but also I do expect a little bit of consolidation from the stock. So I would say if you haven't bought the stock yet, there may be a chance that a gap fills at 275 for pulling liquidity. So make sure that you wait till that happens.
Let's see. XOM. So XOM end of month, you've got a pretty nice level here at 111, and then support down here at 100, and then end of year 120, still the biggest level to the upside, and 100 the support. So I like that there's some levels here to the upside on it. Let's take a look. I like the bounce here. It bounced right out of the golden pocket. So I'm just gonna, set my chart here real quick. And then I'm gonna get rid of these so we can see things clear. So here's what you're kind of looking at. I'm just gonna get rid of this box. So if this is your essential high here and your low, you can see that it came down and tapped the golden pocket, right? This is your golden pocket here. It almost hit your monthly move. It just kind of grazed the area. So this is the range that it's supposed to be in. If this low holds, then I would essentially be looking for it to come to 110. And then if it can get through 110, then you'd be looking for probably a move into like 112, 113 area. And then if it gets through 115 somehow, 120 is still the target for the end of the year. So it could very easily get there if this, right? This is a one, that's a two, that's a three, that's a four, and that's a five. So that's essentially a five-wave retrace. So if this is the bottom of XOM's retrace here, then I would be expecting a move here to the upside. So again, as long as it holds like this 105 area, it'll avoid coming down to this 100 support. And then I'd be looking for 110 and then 115 and then 120.
Wow.
So
Novo Nordisk gross margins are
Million dollars.
85%. Their
Nice.
net profit margin, bro, the net profit margin is 35%. How crazy is that?
That's pretty crazy.
That is actually crazy.
Do I like this for a short? Uh, no, I don't. Um, maybe. I mean, weekly, these last two weekly candles are not too great.
Yeah, that's giving me pullback vibes.
Yeah, these last two weekly candles don't look too great. So, I mean, if you want to use the all-time high as your stop loss, it's looking a little ugly up here, but that's still pretty, I mean, it's a $30 move to the upside. Um, if it breaks down, then I would expect it to come into 509. That would bring it into the first fib on the weekly, which is 510. So below 510 gets probably pretty ugly, to be honest. These last 3 weeks don't look too great. Like those three weekly candles are pretty ugly. So I think if you like the risk here and you think the market's going to come down, then it's not bad. If you think the market's going to melt up into 650, then what's probably going to happen is maybe it bounces as the market melts up a little bit higher and then gets a little bit weaker. So, um, looks pretty ugly on the weekly. But if the market breaks over 647 and goes to 650, I would expect it to kind of bounce back to the top of this box area and not break down just yet. So we'll have to wait and see. But yeah, if you like it short, I mean, take it short. So the weekly looks pretty good. Way overextended. Bet you the daily has a pivot.
I gotta use the loop. I'll be back.
Yeah, go. Yeah. So it looks like it wants to come down a little bit. Get rid of this. There you go. You could even use that low there as your range. Yeah, but remember the those aren't my alerts. So that has nothing to do with me. So those are just trade ideas for people that struggle to find trade ideas. You got to go through and read them. They have nothing to do with me. These are other people's ideas. So you'd have to go through and use resistance 525 to 532 range, anticipating 520 to become resistance, and for there to see a return to mean targeting 509 to 501, 490, 480 to 475. So they're essentially looking for it to break below 520, make that resistance, and then work its way down. So it's still in the midpoint of the monthly range too. So technically you can come all the way down to 480. That's your monthly range. MicroStrategies, yeah, I don't think much changed with it. Yeah, not much changed here. So, I mean, it's basically at the low of the monthly range. I mean, it's pretty close. It's like $20 off. Um, Bitcoin. Do, 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 do. Bitcoin's at the golden pocket. So I already told you guys this. Look, Bitcoin falls down to the golden pocket. Good chance that MicroStrategies is going to come down. What's MicroStrategies down overnight? Let's see. It's down 1% at 362. So if Bitcoin bounces here, then MicroStrategy should bounce as well. But do you guys remember what I said last week when I said this looks like a liquidity sweep and there's a good chance, right? You had a previous high, you swept the highs. Watch this retrace back to the golden pocket. It's back at the low of the box. It has to bounce here. If it doesn't, it's most likely coming all the way down. If it comes all the way down, you're going to start to see ugliness from all those crypto stocks. So you essentially need crypto to bounce here if you're playing those proxy stocks. So Bitcoin did exactly what it's supposed to do, which is, right, this wave is played out perfectly. So now the question is it going to bounce here? And if it does, then your proxy stocks, they might bounce here. This is a good support here, right? If it's an order block. Yeah, there's an order block here. So it's bounced down here quite a few times. You've got one all the way over here that it's kind of sitting in right now, right? So and this order block is held 1, 2, 3, 4, 5. This would be a sixth time. So if Bitcoin bounces here, then it'd be a nice bounce. But if Bitcoin doesn't bounce here and it breaks down, then this is most likely going to break the order block, which is going to then set up the move potentially down to the golden pocket, which again we've talked about quite a few times. And also, if you go back and look at this, right, this is the wave we're watching, and this is a liquidity sweep. So your first wave down, does this break and fall further down? It all comes down to Bitcoin. If we just said potentially the market could pull back this week, maybe Bitcoin pulls back a little bit, does that pull MicroStrategies with it? It all depends on what happens with Bitcoin. So I still like it back into the year. Again, I still think Bitcoin is going to hit like 145 before the end of the year. But for the short term, I wouldn't be surprised if we saw a pullback here.
Yeah, definitely. And then that breather rotates into all the altcoins and meme coins.
Keep
Um,
in mind too, guys, I don't know if you guys looked at this. Um, Sector rotations. The number one sector last week was healthcare. So healthcare was number one. That wasn't just due to UNH. Most healthcare stocks were getting bought up,
yeah.
and that's usually the defensive sector, right? So it could mean that we could see a pullback this week. So just again, be cautious of those key levels. So if Bitcoin breaks to the downside, which again, it's right at the golden pocket. So you should know this by now. If it breaks the golden pocket, you get more downside. If it bounces here, then good chance, right? You make a play back up to about 120. Um, but now you have a liquidity sweep to the upside. So you can see how they're just out here just playing with people, right? So you had a liquidity sweep to the downside here. Then you have a liquidity sweep from the upside here back to the downside. So really needs to bounce in this area. If it doesn't, then I would say 112 would most likely be where I think it's heading. So, and we talked about with coin with this as well. You guys remember? Is coin going to break to the downside here? If Bitcoin breaks to the downside, does coin come down and break this and head down to this zone? Right? Which is the longer time frame. You guys just saw Microsoft. Microsoft looked bearish, right? So if Microsoft comes down, Are you going to get some pressure to the downside in the market? It's a good chance, right? Is that going to spook some of these growth names? Good chance, right? Apple's at the golden pocket, so it could reject here as well, right? So you gotta start to look at a lot of different things and say, do I like the risk here?
Yeah, this is a decent spot to put on a hedge. Decent.
Hmm. Remember, Apple just hit its weekly rate or its monthly range. So a pullback here would make sense. Just like when it hit the bottom of the monthly range and then just rocketed back to the top. So don't be surprised if it closes somewhere around like 225 on the month.
I just want to make sure that everybody is on the same page and understands um, what's going on here and why the case for a pullback does make sense. Because, and obviously, this is just hypothesis and theory. We are theorizing something is happening, but the signs are there, right? The signs of the US 10-year yield pressuring the market downward. Remember that when this goes up, the valuation of stocks comes down, right? And remember that when this goes up, it is the expectations of quantitative tightening that are increased. And so that's not what we want. We want quantitative easing. We want, you know, for money to flow back into the system, right? So there's a chance that this will drag on for a little while before, ultimately coming back down. So if this is the case, it might do one of these to test that and then come back down again later on. And that short-term increase in US 10-year could cause a bit of problems, right? Especially if they start delaying the rate cut expectations. I think now for September, it's 100% or 90% for the interest rate decisions. But things will change, right? That's why I said 0 to 1 would be my choice.
Yeah.
Where is it? Is it this one? Yeah, it's this one. Right. Am I sharing my screen? I am, right?
No, you're not sharing your screen. My screen's
Not?
on.
Oh, okay.
No. You want to put your screen on?
No worries. I just wanted to give
Okay.
the probabilities to you guys. Okay. So here, I'll send it on the Discord. You can see how quickly this changes too.
Yeah.
September is now 84.6%.
Ooh.
October is 51% chance of rate cut. December is now a rate pause. And then the continuation of the rate cuts are apparently next year.
Hmm. Do, 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 do,
I'm
do,
gonna
do.
stop the recording here so it doesn't
Yeah,
become
you're good.